Hi everyone, this is Brian Neal with Tradetobefree.com, and just want to review some of the trades we looked at today. And one of the ones we looked at was a bombing pattern on BRKS, and if that broke the prior day's high, we would have jumped in on that, but it didn't do it. If you go back to it, 2-day chart here, you can see it didn't break the prior day's high, so we didn't have any interest in that one today for that explosive bombing trade. Had to run some errands this morning, so I didn't get a chance to do a screen for all the bombing patterns this morning. I usually go over a few hundred charts to see if there's any out there, and I didn't get a chance to do that. So there may have been other good setups for that pattern today, I'm not sure. But what I got a chance to look at today was Sarepta, and this looked like it might be the first explosive bombing trade of the year, of the quarter, I should say. We haven't seen one that really set up nicely this quarter yet. And Sarepta looked pretty good here. It had a really nice pattern, gapped up a lot. They raised guidance. And I saw an earnings beat on the headlines, but I always check Zacks first before I jump in on a trade. And Zacks had them missing estimates by like 20, 30 cents. And they have a Zacks rank of 5. So that's a red flag right there. Not sure why that is, but Zacks is the sort of the expert on earnings estimates and earnings in general. So seeing that was a red flag. It didn't really qualify then for the earnings eruptions trade. It did have a really good pre-market pattern, and the technicals look really good. And so I thought, well, you know what? I'll jump in on a small position size. I'll just put a small position on this one, less than I normally would, and just see how it plays out. Play with that tight 2.5% stop loss. And the bell rang and started off pretty good. It went up 2% from the ideal entry point, which is just above this candle right here, and got off to a pretty nice start. Looked like it was going to go pretty good, and then it turned over and pulled back and hit the stop loss point. So if this stock had qualified under the earnings eruption strategy, if you follow the course and look at all the rules in the strategy, one of them is that it has to beat the Zacks estimate by 15%, and it didn't do that. So that makes it more susceptible to these kind of pullbacks because, investors and traders will look at that and say, you know what, sure, the guidance has gone up, but, to say that you're going to meet those estimates, it's kind of like saying that, hey, I ran a 10.5 in a 100-meter dash recently, but next quarter I'm going to qualify for the Olympics and run a 100-meter dash in less than 10 seconds. That just doesn't happen, or doesn't happen too often. So it really confuses and raises red flags with investors and even traders like me. When you see that a company is raising guidance, but they're not meeting the estimates. So it's like, what does that really mean? If you raise your guidance but you can't meet your numbers, a lot of investors and traders will sort of wonder how good those estimates really are and how reliable they really are. So that's why it's important to find the companies that are beating estimates and raising the guidance. Okay, in this case, Sarepta wasn't. Now that being said, this is a very strong technical pattern here pre-market, and it's got plenty of shares. We had this Sarepta in the explosive bottoming pattern back early this year, and that was a trip because this thing opened up. It opened up below the entry point. It pulled back at 5-6% or so, and then it came back. It soared. It went through the entry point, hit the entry point, and it soared 25% in an hour. So it went up 25% in an hour. So I saw that and I thought, you know what, this stock is really rangy, really moves up and down a lot, and so it could just break out of a good technical pattern and just surge from there. And so I thought, you know what, I'll take a small position size, and it's the first earnings trade of the year. It doesn't really qualify as an earnings eruptions trade because it doesn't have the earnings beat. Again, we go by Zacks, not other information sources, because to us they're the expert on earnings and earnings estimates. So if you look at the Zacks rank model and how it's performed over the past 30 years, you'll know why I feel that way. So I go by Zach's, and so I took a small position, and sure enough, with a real strong technical pattern, if you don't have the fundamentals to support it, you're gonna get more volatility, and that's what happened here. Sometimes these pure technical patterns will break out and they'll go up. A lot of times they don't. So um, I thought this could go to 46 and do it cleanly. I don't want to take a wide stop on this, so I stopped out with a tight stop of like 2.5%, 2.5, 3% on a small position, and said, you know what, there's going to be a lot better opportunities coming up in the weeks ahead and the days ahead that will meet all the parameters in the earnings eruptions course. So on those, I'll take full positions, and instead of taking a partial position on this, very marginal trading setup. Now that being said, it's reps that may chop around and may continue higher for a while. Again, without beating the estimates, I'll wait for a better setup. So that was the one trade today. It was a small loss, and I'm still holding AAOI. Applied Optics is still making new highs on a daily chart. It's amazing. This stock has really got the strongest fundamentals that I've seen in quite some time too. And that's why we picked this trade. That's why we got in last Monday on the double bottom breakout, because they've got not just triple digit growth but quadruple digit growth, over 1,000%. I looked at the IBD synopsis on this right now, and they had over 2,500% or 2,500% growth in earnings year over year in the most recent quarter. Sales growth was 91%. It's got really, really strong growth, and like I've been saying, they've pre-announced now 3 quarters in a row, and I knew there was a good chance they might do it again, and they did. But they also beat those numbers. They tend to beat the pre-announced numbers when they finally report the actual on the actual reporting date, which is coming up within a couple weeks. So this could keep running to 100, 105, 110. I would think it would come back, though, at this point, pull back to the 9 EMA. I'll probably have taken off most of my technical swing trading position. I'll keep the remainder until we see that pull back to the 9 or 20 EMA and a strong rebound starting off that, and then sell it into the next wave higher. And the Three Stocks Wealth newsletter, we have still a large position in the stock still, and I think we're up another $1,000 today on this between the two or so, 2,500 maybe. We're going to just keep that until it shows signs of trending lower, and right now it's not. So, when you get these real strong growth stocks, that we feature in the newsletter and that we follow using our own trading, and they have these really bullish patterns and these really bullish long-term trends, sometimes they make these kind of moves where they go up 50% in 2 weeks. So, you definitely want to be on these and take a look at the earnings beats this quarter and the companies that have the very strong growth right now. If we get a re-acceleration, if we get acceleration in the economy, we'll have a lot of growth stocks that have really strong numbers that are going to make moves that you'd probably be pretty surprised at. So that's something you want to prepare for in case that happens. So that's about it for now, guys. The next earnings eruptions trade, it didn't come up today, but one that satisfies all the criteria in the course will come up in the days or weeks ahead, and that will dwarf Netflix and the moves other stocks have made so far out of the open, and looking forward to that. So stay tuned, and we'll talk to you again real soon.